Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Friday. This is your first time seeing one of my videos. Welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. Today I wanted to talk in depth about the new Federal Reserve Chair, Kevin Warsh. I just watched a pretty long interview of his with the Hoover Institute, which I highly recommend if you're interested in really understanding his fiscal policy, but I'll try to summarize it in a little shorter span. The long and short is he is not what you would think. In fact, he's kind of the opposite of what you would think of a Donald Trump Fed chair nominee. And I want to talk about what I think that could lead to in mortgage rates. So the big thing to know about Kevin Warsh is, A, he was a member of the Federal Reserve. He's not some outsider, which some of the potential candidates were. And he doesn't strike me at all as like a Trump lackey. He is very much a by-the-book Federal Reserve guy. And if anything, he is more extreme, I would say, than Jerome Powell in terms of being a hawk, meaning wanting to keep interest rates high to combat inflation, and being really strongly against quantitative easing and raising the balance on the Federal Reserve's books. He talks about how it needs to be done during extreme situations like 2008, the Great Depression, but how after 2008, it kept being done in times where we were not in extreme financial peril. And he also talks about how he resigned from the Federal Reserve because he could tell that they were going to keep doing quantitative easing even when it wasn't completely necessary. So what does that mean for today? Right now, Donald Trump is pressing for lower interest rates and quantitative easing. He hasn't outright said it, but basically that's what he wants. That it will at least initially bring mortgage rates lower. We saw that a few weeks back with the buying of mortgage bonds from Fannie and Freddie. That had a temporary positive effect for mortgage rates. Long-term buying of mortgage bonds and raising the Federal Reserve's balance sheet would have some positive effect on mortgage rates. However, it would not be good in the long run, and that is where Trump versus Warsh, at least Warsh's historical views, come in conflict. And it's going to be interesting to see how they navigate those things, because right now there really is no reason to cut rates steeply. Certainly, we might, right now the markets are expecting 1 to 2 more rate cuts, maybe as many as 3 the rest of this year. Really no data to suggest we need to be cutting really rapidly. The job market seems to have stabilized and inflation is still running a little bit above 2%. It's worth talking about the market's reactions to this nomination. So initially, gold and silver prices plummeted with the announcement of Kevin Warsh because, and this is important to understand, gold and silver are used as hedges against the dollar. The dollar is still the world's reserve currency, but devaluation in the dollar means that assets like gold and silver are more valuable. So what that means is that investors do not think Warsh is going to let the dollar devalue. He's not going to let runaway inflation happen. He's not going to let the deficit spike. All things that make the dollar less valuable and make asset classes like real estate more valuable. So that happened. However, mortgage rates and treasury bonds didn't really react strongly to the news. Now, I have a feeling if Trump had nominated someone with no background in working with the Federal Reserve, someone that more clearly is just a Trump guy, someone that's going to do his bidding, I think that would have led to an uptick in mortgage rates. Bottom line is, if Warsh either keeps things going kind of the same that they have been with under Jerome Powell, or if he is even more hawkish than Jerome Powell, which based on all of his prior interviews, his prior stances, he appears to be, that's going to lead to fewer rate cuts from the Federal Reserve this year. And I have to say, I don't think that's necessarily going to be bad for mortgage rates, because what he's focusing on is bringing down inflation over anything else. So it's going to be very interesting to see how in line with all of his historical records Kevin Warsh is once he takes over as Fed chair. And if he is the same Kevin Warsh he's always been, how much Trump pushes back on him compared to Jerome Powell. Maybe it's even more, because he does seem to be even more hawkish than Jerome Powell. If you have any questions or comments, feel free to shoot them below, or call, text, or email me. But thanks for tuning into this video, and I'll see you next time.